Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. The most discussed topic today in the market is US and Iran war. On 28 February, US and Israel combinedly attacked Iran. Iran retaliates with attacking US bases. Supreme leader of Iran got killed. IRGC vowed that they are going to take it to the next level. Now, what next? In today's presentation, we are going to discuss what impact it is going to have on different asset classes and mainly what is the outlook for dollar rupee pair for coming days. So in current market situation, there can be two scenarios. Scenario number one, quick resolution. Both sides have done a strike. Both sides claim victory, tension eases, and market recover swiftly. The probability of this scenario is close to 20% only. Second scenario, which is most likely scenario, where we are expecting the probability is close to 80 to 90%. Escalation will continue to rise. Broader international involvement will happen. Strait of Hamas will be closed. Oil prices will go higher, and the war will continue for some more time. If this happens, let us understand what impact it is going to have on all asset classes. So the first sentiment change will be from risk on mode will move to a risk off mode. Second, as Strait of Hamas will be closed, we are expecting that oil prices will move higher towards at least 78 to $80 kind of a scenario. Then we are expecting that equity market sell-off in US and India will continue. In Indian terms, we are expecting Nifty to move towards 24,800. If that level is taken out, we may see further downside towards 24,500. Gold and silver prices likely to move higher. For gold, we can expect the prices to move towards 5,400, and dollar index will take a strong support near 97 kind of a level and likely to move towards 19.5 to 100 kind of levels. Now let us discuss outlook on rupee. Over the past few weeks, market was expecting some kind of escalation between Iran and US. Because of this reason, we were saying oil prices were inching higher. Equity market in US and India was not doing great, and we have been suggesting our client that rupee can move towards 91.20 to 91 and a half kind of levels. Now what next? If oil prices keep on escalating and there are higher chances that India will be heavily impacted because of Strait of Hamas getting closed. 50% of oil India imports is via through Strait of Hamas route. If crude price oil higher than 15 billion, the trade deficit can increase and our current account deficit can increase by 0.3% of GDP. So indirectly it is impacting our trade deficit number. Because of war, crude prices are going to move higher, gold is likely to move higher, and dollar index is going to move higher. These are all the 3 points which is going to keep pressure on rupee. Because of all of this reason, we are expecting that 90.80 to 91 is going to act as a very strong support for the pair, and there is a 90 to 95% probability that the pair is likely to move towards 91.80 to 92 kind of levels. Now let us discuss strategy for thin margin exporters. For thin margin exporters, we have been suggesting from past few weeks that 60% they can cover between 90.80 to 91 kind of a level, and for remaining position they should wait for higher levels of 91.20 and 91.50. Now we are suggesting them that they can keep a strict stop loss of 90.75 and wait for higher levels of 91.50 to 91.75. Now let us discuss strategy for thick margin exporters like textile exporter or engineering exporters. For them, we will continue to suggest wait. Now they should increase the stop loss level to 90.70 or 90.75 kind of level, and they should aim to start booking forwards near 91.75 to 92 kind of levels. Now let us discuss strategy for importers. From last couple of weeks, we have been suggesting importers that they should buy for next 45 to 50 days. But there can be a possibility that few importers might have missed buying at lower levels. For them, we will suggest that even on Monday morning, they get levels between 91 to 91.20. They should not wait, and they should cover their imports for next 45 to 50 days, because 92 will become a reality soon. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.